I think it's gonna ask you to if you want me to record your shit.
But we're good.
So, I believe last week US30 was like somewhere around this area right here. I kind of already like knew. I think that's why I have the Fibonacci up here, because I executed a sell from up here, just to get a better confirmation that the market was going to continue going down. Let me erase that. But you know how like regular institutional traders trade patterns? That right there, if you search it up on Google, it'll give you a pattern. Actually, I'll search it up right now so you can see. But you know what I'm talking about, right?
No, they're just going off of their line that they drew. Yeah.
So from the looks of it, it looks more like a I think it's like a rising edge where they wait for the market to basically break down through here, come back up, retest into that zone, and then continue going down. Where that's kind of goofy because, bro, we play all in that area. So like obviously looking at higher time frames on the daily time frame, you look at where structure is. You got a high, low, high, low, high, low. It came and created that high. So the moment that it respected that, it didn't break that resistance that it had up there. So your best move after it created that all-time high was to wait for the market to redistribute in a smaller time frame. So obviously going down in a smaller time frame, it was creating highs and lows, then it broke structure. Look at that imbalance right there. It looks like it tapped into that imbalance. This week here was possibly that entry off the 50%. I know a lot of people.
Okay, so with imbalances, like how do you go about like marking your imbalance? Because for me, I always like I get like the wick of the last up candle, and then the wick of the candle that like retraced up a little bit before it kept pushing down. If that makes sense.
For me, this is an imbalance. This whole space right here, that's imbalance.
Okay, so yeah, that's basically how I do it then.
I mean, it's not always like that because I mean, you see right here, there's an imbalance.
Yeah, exactly.
And then I don't consider imbalances getting filled until it either closes, until it reaches 50%, or it does it all the way. So on here, I mean, you can see clearly that it went through all the way. It didn't even seem like it mitigated off of that imbalance at all.
Yeah, if anything, looks like it just built liquidity.
Yeah, so I mean, there's a possibility that eventually the market, since this is the all-time high, if you catch somewhere around here the buy opportunity, that'll be amazing for you to ride it all the way up until like right there. Let's say the market does give you that reaccumulation tomorrow at the open. That's an easy almost 3,000 pips. I mean, 3,000 on a 1, that's literally what, like $3,000, right? I don't know.
I don't really be trading.
I don't really drop 0.1s no more. I just 0.2s, 0.3s. But look at structure on the 1 hour coming down. You can see that it's creating a downtrend. You got your highs, your lows, high, low, came down, created this low, respected that, came down, created here, but then it broke structure right here. So that's perfect that this area right here is an imbalance that I was paying close attention to basically get you that second entry from this buy down here. So maybe it happens during London session where it gives you where it respects that imbalance and it just reaccumulates through here, which is totally fine. If it does that, then wait for the market to reach either this high right here to come back down here in New York, and then obviously ride it all the way up. But let's go over why I took some of these trades.
Okay, so when you look for your setups, are you looking at the 1 hour? Yeah,
Uh,
right.
I'm going through everything. So I'm going
Or
through
like
the
from
daily.
the higher time frames. Well, I guess what I'm really asking, whenever you actually get into your trade, are you looking at like the 15-minute, 1 minute?
Yeah, it's off the 1 minute. So like
Like the 1 minute.
obviously like I'm in the daily right now. I'm looking to see where exactly time is. Let's say for an example, we were up here. So I know that it just created a new all-time high. So what I'm gonna want is the market to come back up, retrace up into redistribution for the market to continue going down. So that whole week, you should just be focusing on getting more sales and buys, because why would you want the price to? Why would you want to buy when price is literally telling you that it has to go down and create that low? That's what
Yeah.
a lot of people do when they're getting ready to like start trading. They want to chase the buys when it clearly tells you that you're going in for sales.
Yeah.
I go down to the 4 hour time frame and I'm looking at I want to see what's going on. Like I want to see exactly what uh what I want to get into. Let's go ahead and replay that. I believe we'll play it off. But let's go in a smaller time frame so you can see. Mm,
And then what are those lines again? Oh wait, that's the session opening, right?
yeah, so this is London session and this is New York. Obviously, like I've said before, in US30 indices overall, the market tends to mitigate off of those London sessions. But let me see. I want to give you something clear that you can understand. Let me go down to the 5 minute. No, not that one. That was today. Okay, bet. Look at this. And then, but I'm gonna go off the 1 minute. Let's go. All right, look. So, like I said, it'll mitigate off of the London session. So look what's going on. Like, can you tell me exactly what's going on right here?
I see a big imbalance on the bottom and on the top.
Where at? Up here?
So let me see. So I see all of this is imbalance.
Are you trying to drop? Because I don't know. Let's see.
Oh, you don't see it?
Uh-uh.
I wonder if it's because let me see. Do you see that?
Okay, yeah, I see it.
Okay, so let me delete that.
Uh-huh.
Because for me, I see the imbalance up top, right?
Uh-huh.
I see that. The bottom, I don't really. I think we'd have to go to. I don't know. You're already in the 1 minute. I mean, essentially, all of this is just insufficient price action too. I feel like. But yeah, I'd have those two, I guess, ranges to be looking at.
Okay, but so this is what I was paying close attention to. Obviously, like I said, it's going down in a downtrend. If you're following it, it's a straight up downtrend. So London session, it pushed it down, But like I said, it's coming down in the downtrend. If you look at it from higher time frames, it's creating highs and lows, highs and lows. So you got a high, or low, high, low, high. It came and created this low. So now it created that high. So after that, I know for sure that I have to come in and short it. So a few minutes before, I think 9:30, which is New York's time, 8:30 for us because we're central. Look at that. Look at it. Look at what's going on. It's creating a high, a low, a high, a low, a high, a low, a high, low, high. So right then and there, I was waiting for the market to just break structure. I wanted it to break structure on here. And as you can see at 9:30, it happened. So as soon as that happened, look what you identify right there. You see that imbalance right away?
Yeah.
And look at your institution candle. So I waited for the market to go all the way down here, right? Because that's where I put my Fibonacci. It went all the way down there. So my 786 was an area that I was looking at. From there to there, that's a 40 pip stop loss. So I
Is that
was,
just the key level that you like to look at, or is there a reason
yeah,
why you
it's like a key level that I
Okay.
mostly execute my trades off of.
Yeah, because we
And
do that too, like the 786 to the 886 for sure.
uh,
So I was making sure that's what you were going at, or like going with.
yeah, I mean, every time I put my fifth, I don't even go based off 50%. Sometimes I go based off 71, but I pull the trigger at 76 the moment that it gets into that. But like I said, my stop loss for if I would have put my entry right then and there, that would have been like a 50 pip stop loss. I didn't want that because I mean, obviously US30 was moving that day that this trade happened. So I set my entry between 786, I believe, or right in the middle of the imbalance. As you can see, literally wicked in to that
Yeah.
886. And then, so my stop loss, my risk to reward was there, 26. First TP would have been right then and there at the at the at this low. And then obviously you see it ran like 208.
Jeez.
Second TP going on a higher time frame.
Hey, so with your entries, are you market executing or are you setting limits?
Oh no, I market execute every single time
Okay.
because, like I said, it moves so fast.
Yeah,
That
that's what I was. I mean, what I was saying, since it does move so fast, I don't know if you'd be able to like catch it. You know what
Yeah,
I mean?
if I
Because
was
I
to
don't
put,
really be on US30 like that.
yeah, if I was to put a limit, I would miss it. But as you can see, there was an imbalance right there in the 5 minute, and it looks like it just reacted off of that, which technically it did. Smaller time frame. Look at that. It literally gave you that buy opportunity around. So 30 minutes after they opened, it gave you that buy opportunity. So I closed down here at the imbalance at the 50% of that imbalance. Um, but like I said, you pay real close attention and you can catch that buy. And Dow Jones tends to do that every once in a while. You see that low, high, low, high, low, high, low. What happened? Market broke structure, or yeah, it broke structure.
That was an imbalance you were looking at right there.
Where at?
With your blue area,
Right here.
your blue square or
Oh yeah,
rectangle that you got going.
that's it.
Imbalance on
That's
the
an
higher time
imbalance.
frames.
Yeah, on a 5 minute.
Okay.
But as you can see, I didn't get this one. But this is a low, and then I mean a high, low, and then broke structure right then and there. You could have did 786 from then and there. I believe it didn't tap it, but the risk to reward was there. If you would have went off the 50%, I didn't take this trade, so. And then look at that stop loss. That's just too much for me. It's not something that I would take because it's just
Yeah.
like I said, stop loss is way too much. But if you would have caught that sniper entry, you literally went into like no drawdown. Like what? 8 pip
He's
drawdown.
1 to 17. That's
Yeah.
crazy.
Let me see.
Hey, so with imbalances, for me, I feel like there's, or I mean, I learned that there was two, or there's two that I know of, I guess, as far as you can like look at imbalances.
Uh-huh.
So I know that you can look at it like as a range, like how you do it, or how like because I do it too. And then there's like another imbalance that I first learned is just like the basically where there's insufficient, where there's like not there's no price action to the like the right of like of a body of a candle. You know what I mean? Like that hasn't been filled 50%. Like you look at that too sometimes,
What do you
or
mean?
like they do
Explain
you
it again.
so like zoom into one of the candles,
Uh-huh.
like where it like just sold off. So
Where it's
like
sold
okay,
off.
I mean right there was good.
Oh, okay. All right, go for it.
So let's see. So like this candle, for example, like it wasn't filled at like at the time
Uh-huh.
it wasn't filled 50%. You know what I mean?
Yeah.
But like that's just going off of a candle though. Like it's for imbalances. Do you do that too, or do you just look at like the ranges? Like because in by range, I mean like where you're actually like going off of there and then going off of here. Instead of playing the body of the candle, you're playing just like the area of imbalance. You know what I mean?
To get an entry.
Well, I'm just saying, I'm just like saying just for imbalances in general, like for looking at
Okay.
imbalances.
Sometimes when like the imbalance, I see some people do this. I don't do it, but I see that they use the fib. They go off of where the imbalance starts and where the imbalance ends, and that 50% right there is where they usually execute. Like I said,
Uh-huh.
I don't do that, but I've seen some people
Well,
do that.
I mean, I get that, but I was just saying like for imbalances, right?
Uh-huh.
Like I think it sounds like you just do that type of imbalance. But whenever I first like started learning about trading, they were like the people that I was learning from, they were saying that imbalances is basically like you look at a candle and if you don't see like any retracement into that candle to 50%, then that's an imbalance with that candle. You know what I mean? So then you'd be able to like look at that as an imbalance from just based off the candle. You know what I mean? Like, did you have you ever seen that or like learned that?
Honestly, no.
Oh, because I like the other way better. I
The way
like how you do
I know
it. Yeah, I like the way that you know it. The way that you know it, I learned that later, but I feel like that's more consistent.
I think you learned that on the call when I ran it, right? The very first time I let you get
Yeah,
up.
well, yeah, hell yeah. I learned it from you, and then I went back and just like tapped into the bounce back videos and got locked in with it.
Yeah,
Or
because
not even bounce back. It was just the powerhouse videos,
yeah, the power.
which is still trade house, but
See, like right there, I consider that imbalance because
exactly.
there's space in between in here that the market hasn't make mitigated out of, and it doesn't always have to be like that. It can be like body here and body here with like let's say just one wick. As long as there's that space in between, there's imbalance right there. Or I mean, where it's not considered imbalance is when the candle's like there and the other body's right there. As you can see, like the market never, there's no
Yeah,
space in between that line. So I mean, and then the imbalance is everywhere.
like
But
right there. If you leave it right there,
uh,
I would say that. Hold on. let's say that. So there's an imbalance, right?
Oh yeah, yeah, because on a higher time frame, like let's go back to that. Look. On a higher time frame, that imbalance it's a bigger imbalance. It may not show it on there, but you see that like it's a bigger,
Yeah.
but uh yeah, because I mean it's dumb if you do it like this, imbalance here and then imbalance here.
Yeah.
All of that is imbalance. You're just
Yeah,
gonna,
exactly.
but it's not something that I would be looking for in that area.
So
Obviously,
look, let's let it play out some. Let the market play a little bit. So like right there.
where
Leave it right there. With all of that, would you the bottom of your range? I get like the top of your range would be like right there.
uh,
But for the bottom of your range, would you
it
be
was,
looking at right here? Or would you be looking at uh here?
it would be right there where you put that.
Okay.
It'll be
Because that's something I've been trying to figure out, like as far as like the bottom of my range.
all right. Yeah, it would be right there, but it has to be like I only pay attention to imbalances when it's close to an area that like that uh that I know for sure I'm gonna be playing off of, because like I said,
Yeah.
imbalance is everywhere in the market. You just gotta know which imbalance is an important one.
Yeah.
And I mean, going back to that trade that we talked about, wherever it is, that trade that we talked about, that imbalance was an important imbalance because I knew that the market needed to go back into that area after it broke that structure. And then it's right next to the my institutional move, because did it sweep? Did it sweep? Yeah, it did. Uh well, yeah, I mean, that's hopefully that makes sense. Did it? I don't.
Yeah. I think the biggest things that I got from this was just like understand that you only have like that one way of looking at imbalances. And for me, like I said, like ever since I learned that, that's like the biggest. That's like the I switched how I looked at imbalances. That I like that way of looking at imbalances way better.
Yeah.
Um,
Look at
and
this.
then
Look,
what was that?
This one was like some where you had to be real patient for it because it didn't happen right at the open. It happened like at like an hour later. But you can see at New York it shot down, and the moment that it shot down, I was honestly like, to be straight up, I saw it was coming down at a downtrend. I was looking for the market to come and break that structure, and which it did. And during during uh during New York, it broke that structure, and you can see there's an imbalance right there. So I was waiting for the market to come tap in and keep going down, but I got busy. I did. Yeah, I got busy and I didn't pay attention to it. And I was like, man, I missed the first entry. But then it got like it literally went up, took out these highs,
Mhm.
and then as soon as I saw that on a higher time frame, look, I mean, on a higher time frame, I was like, boom, it broke this structure down here. That was a 5-minute break. So as soon as I saw that, I went based off that imbalance right there. And obviously I let the market come all the way down, and I used my fib also just to make sure. 786 was just above that. But I was really, like I said, I was really paying close attention to that imbalance. As soon as I saw that imbalance, I was like, market's gonna go into that. So I
Mm.
mean, you could have done what other people do, 50% of that. And
I know
I
people. I spoke to people that say they get in at 50% and then put a 10 pip stop loss every time, regardless of.
You see, it went off that 50%, and then stop loss. I know a lot of people would have went like stop loss at that at what's above the 50%, that 71 or 86. But for me, honestly, I would have did it at the end of that. Uh, at the end of that imbalance. So
Okay, yeah, because I was gonna ask you that too.
yeah, 16 pips. You could have went to this imbalance right here for a quick. What is that? 1 to 15, and
Sheesh.
obviously it hit that. You could have went lower all the way down here, but if you look at a higher time frame, like I said, market in a higher time frame has been going like low, low, low. So honestly, you could have just held that sell off for a long time and target that low at that
Mm.
bottom, and then obviously it did what it did.
Sheesh.
I think it ended up running like 600. Yeah, and then it started going up. Yeah, but that, bro, these are simple, easy trades. If you can,
No, it is. Yeah, I think the biggest thing that was like bothering me was like just understanding that you gotta look at the 1 minute. Like at first, like I really wasn't sure like what time frame you should be going off of. Like cause with like the pairs, like you of course you gotta look at like the higher time frames, right, to see where you want to get in. But like getting in and actually like understanding where structure is going, like I'll look at the 15 minute and then maybe the 5 minute. But I kind of wait for like the 15 minute first, and then I'll go and get in. Just with the pairs. But with this, it's like it's so quick. You got to look at the 1 minute, but it's like I wasn't sure if you were actually looking at the 1 minute or the 5 minute. You know what I mean?
see, I
But
go,
now that you're saying you look at the 1 minute, it's like, oh, okay.
yeah, I go back and forth, but mostly I look at the 1 minute. So let's say this is the daily time frame. So when you're in a daily time frame, what is it doing? It's going up in an uptrend. So from here, it created a new all-time high. You want the market to redistribute so it can go down, and you're gonna target, like, let's say you get up in somewhere down here. Your target is gonna be somewhere over here.
Yeah, look at imbalance right there.
If the market's going to continue to go up in a bullish momentum, it has to respect that previous low. So your TP, let's say you get in somewhere down here, your TP has to be at that previous low. But if it breaks it, then you know that the market, either way, your TP needs to be here regardless.
Yeah,
You don't know that the market's going to keep going down.
yeah. And if you don't put that or like if you don't TP, you're basically getting greedy. So
Yeah. So, like I said, put TP right there. But if the market keeps going down, let it go down, because that's breaking structure. That's telling you that the market is about to shift. So yeah, it's gonna go up, but then it's gonna come down for a much more sell. But what I was trying to say is that look at higher time frames, and let's say that's the daily, right? In a smaller time frame, let's say this is the 4 hour. The 4 hour is creating highs and lows the same way, but it's creating them in the in between of that daily time frame. Does that make sense?
yeah,
It's the same thing. What you see on the 4 hour, you're gonna see the 1 hour doing that.
yeah,
And what
yeah.
do you
Because the market's fractal.
you're gonna see 15 minute. You're gonna see 15 minute, 5 minute, and then 5 minute, you're gonna see 1 minute. So if you can follow a structure all the way down, like right here, look, I can mark this up right there, right there, right there. It's coming down in the downtrend. Look at that. Look, I just marked down literally the same exact thing, but this is in a higher time frame. You just found it in a smaller time frame. Does that make sense?
Yeah, no, hell yeah.
Yeah, but if you can do that, you can identify that, it's going to be way easy. That's why a lot of people that trade retail is so easy for them to make money, but because they're literally following the trend. The moment that it touches up here, they're gonna sell it, and then they're gonna hold it down here, and then but the banks know that. The banks know that they're playing stuff like that, and what they're gonna do is they're gonna push the market a lot lower, take them out, and then go in their direction. So what do we wait for? We wait for accumulation, distribution, and if once we get that, we wait for reaccumulation, redistribution, so we can continue going down the way that we should. Obviously, we target either lows or equals, uh, areas that need to be covered, imbalances.
Hey,
I can text you, bro. I was just letting you know the bars came in.
oh, all right, for sure.
Yeah, most of them. I'll text you, bro.
All right, for sure. My bad. No, somebody was calling. I wasn't trying to let them go, but you're good. We're good.
But yeah, that's what I'm saying. Like, if you can identify the trend from higher time frames, just go into smaller time frames and follow that trend, but get your entries. So if it's going bullish and it already created an all-time high, go for shorts. Don't go for buys when the market is telling you that it's gonna go for sales. Same when
Yeah.
it when it's telling you that the market's gonna go up for buys, don't go for sales. Obviously, yeah, you can short it, but why would you short a market for only 75 pips when you can get in for the buy? Maybe
And
that
write it up.
maybe that short that you're getting into is somebody's buy. So as soon as you get TP, somebody got into that re-entry to continue going higher. And then obviously, like I said, if you want to play smart, because I mean, the concept is basically smart money. You want to play smart in the market. That's why um that's why a lot of people lose money, because they're just going in playing dumb. They're going in blind. So obviously you see it broke structure. It broke that structure on the 4 hour. I don't know if it did it on the daily. Oh yeah, it did it on the daily. It broke structure on that daily. So what can we wait for? Honestly, New York or London session. London session, I want the market to get that reaccumulation to keep going up. I'll get into that second re-entry on the on New York, and then somewhere around here, there's an imbalance right there on the daily. I want the market to get in so it can short a lot more and possibly take out somewhere around here. I mean, you never know what's gonna happen after that. I mean, it can do that, it cannot do that. I mean, you can see it right here. Everybody following this trend and broke it, and then it just never came back. There's a lot of news that's gonna come out soon. I mean, it's the beginning of the year. You don't know exactly what's gonna go on throughout the year, but US30 gets affected a lot by a lot of stuff that happens around the world. You just have to pay attention to all of that. But it's easy, bro. I mean, like I said, once you can figure out, once you can see this in the market, it's so easy.
Yeah.
Trades, break of structure, the retracement into your imbalance or institutional move. You usually go off the Fibonacci from the high to the low, the previous high to the most recent low, and then boom, 786 always. And then that's how I get into my trades. You saw before this, I had like a few entries coming down. I was shorting every single one. I think I did go into one buy, but it didn't go up for much. It was like I knew the market had to come back up to retrace off of that area to keep going down. But I mean, that's pretty much it, bro. Let me end the live, and then we can keep going if you want.
But
I don't even know how to do it.